For months, JetBlue and Spirit have been involved in a $3.8 billion merger as both parties have sought to consolidate and improve their operations. However, all that optimism seems to have been quashed because, on the 16th of January 2024, a federal judge decided to block the deal and potentially dash their hopes. But why has the merger been blocked? And what is the shocking new development in the case? Well, to understand why the merger between JetBlue and Spirit has been blocked, we need to first know why it was initially suggested. You see, JetBlue has been looking to bolster its resources in recent years to compete with America's largest airlines. To do this, executives felt that a merger with an airline with a profitable network was the best decision. So they decided to offer $3.8 billion in June 2022 to acquire low-cost carrier Spirit Airlines. This was a big move by JetBlue, but they had their good reasons. JetBlue is the sixth largest airliner in the United States. Thus, by purchasing Spirit Airlines, the seventh largest airliner, they would control 10.2% of the American domestic market and really give the Big Four a run for their money. We've also seen shortages emerge for both qualified pilots and new aircraft, and Spirit Airlines' fleet has a lot of congruency with that of JetBlue. JetBlue, therefore, could quickly gain new planes while also gaining trained pilots to fly them. However, the most important reason to merge with Spirit for JetBlue was network expansion, and hear me out. JetBlue started off in the American Northeast, then expanded its operations down to Florida. But it's been difficult for the carrier to expand further west, and it has struggled to sustain meaningful operations in cities like San Francisco and LA. You see, JetBlue used to be a lot closer in terms of fleet size and passenger volume to United, Delta, Southwest, and American Airlines. But while others seized their chances to consolidate smaller airlines in the past, JetBlue got complacent and fell behind. That is why they've been trying to rectify their mistake with a merger with Spirit Airlines. By acquiring Spirit Airlines, JetBlue would have taken control of numerous West Coast slots, including those at international airports like Los Angeles and Las Vegas. This acquisition could therefore have helped JetBlue finally expand westward and develop a robust cross-country network of its own. Despite this, JetBlue arguably wasn't the one that was going to benefit the most from the merger. In fact, you could probably say that Spirit Airlines needed the merger more because of its financial struggle post-COVID-19 pandemic. You can even say they were desperate, as the last time Spirit Airlines turned a full-year profit was in 2019, basically before the pandemic. What's worse is that ticket sales for Spirit Airlines haven't bounced back anywhere near expected levels. Dozens of its planes have been repeatedly grounded due to engine problems, and it faces almost $1.1 billion in debt which matures next year. Thus, merger with JetBlue would have been the lifeline Spirit Airlines so badly needed, and their only saving grace from bankruptcy. And as mentioned, the move would have been a perfect expansion platform for JetBlue. But it looks like neither of them is going to get what they wanted, because a federal judge in Boston has put that plan to bed. You see, the US Justice Department, backed by a January 16th ruling from a Boston-based federal judge, has blocked the merger deal between JetBlue and Spirit Airlines due to antitrust concerns. It was argued by the judge that the $3.8 billion agreement would have effectively eliminated one of the two ultra-low-cost carriers in the US and would thereby lead to reduced competition, as well as increased fares and also a stifling of innovation in the industry. It was also estimated that the merger would have caused nearly $1 billion of net harm to consumers annually. These claims do make a lot of sense because Spirit Airlines has certainly been a force for change in the US aviation market. They offer innovative, customizable ticket options, which has forced other airlines to also diversify their offerings. Ultimately, the deal between JetBlue and Spirit, if successful, could have gone one of two ways. It could have placed stronger competitive pressure on the largest domestic carriers in the US, but it could have also affected the consumers who relied on Spirit Airlines' ultra-low-cost model, because fares would have definitely been raised. Which of the two do you think would have happened? Let us know below. Now, US Attorney General Merrick Garland claimed the ruling was a victory for tens of millions of passengers who could have been affected by the higher fares and fewer options could have arose from the merger. Both Spirit and JetBlue have disagreed with the ruling against their merger and are said to be considering their next legal steps. So with the merger looking dead, where do both JetBlue and Spirit turn to? Well, for JetBlue it looks like they might be boxed in when it comes to fares. Its fares aren't affordable enough to compete with low-cost carriers like Spirit themselves, as well as Frontier Airlines. Also, while offering comparatively cheaper fares, its network isn't big enough to compete with the likes of Delta, United, and American. What makes matters a bit worse for JetBlue is that the US market is already quite consolidated, so there are very few alternative targets for JetBlue to pursue acquisitions for. Some analysts have suggested that JetBlue renegotiate the deal with Spirit Airlines following their recent share price dump. But while JetBlue still has the financial power to pursue mergers, Spirit Airlines isn't anywhere as lucky with their options. They either need to look for another buyer or remain independent and restructure their business model to mitigate losses and fast, because bankruptcy is looking like a very real possibility. Even the judge who denied them the merger hinted at a possible bankruptcy for them during the trial. Spirit's issues have in the past raised doubts from concerned analysts and investors about the viability of a potential merger for JetBlue. They felt that JetBlue might have been taking on one too many risks with the merger. Whether Spirit can identify a pathway to profitability quick enough is left to be seen, but it did recently raise almost $420 million by mortgaging many of its planes. However, with the court ruling, they may struggle to raise any more liquidity as their credit profile took a hit. There are fears that Spirit Airlines wouldn't be able to make its debt payments, which are due in September 2025. This is because, on top of financial struggles, the carrier has also been hindered by a manufacturing defect in the Pratt & Whitney engines on some of their Airbus jets. This has led to internal predictions of some 26 grounded jets, or over 10% of Spirit's fleet in 2024. This would definitely affect any growth projections Spirit might have had. And probably as a result of a combination of these damning predictions and the ruling, Spirit's share price was hit with a 47 then 22% drop in consecutive days. Frontier Airlines did try to acquire Spirit even before JetBlue, but it's facing its own challenges and merger discussions look distant for now. However, while all seems gloomy for Spirit Airlines, JetBlue actually have a few options and advantages going for them. You may not know this, but JetBlue, just like Spirit, has also not had a profitable year since 2019. But their size and stronger balance sheet have been able to at least make their losses more manageable. So JetBlue may be safe for now, but if it wants to stay relevant, a major strategic shift is needed and, in recent years, it has actually been preparing for this. Instead of focusing on westward expansion, the carrier seems poised to expand eastwards with the aim of becoming America's first low-cost transatlantic carrier. Breaking into the transatlantic market is very difficult because flight slots between the East Coast and Europe are some of the most sought after in the aviation industry, and it could get cutthroat at times, which is why a few who've attempted to break into this market have failed miserably. However, despite all the challenges it might face, JetBlue actually boasts a number of strengths that could help them succeed when flying transatlantic. Firstly, it has highly coveted slots, including a major presence at both the JFK Airport and the Boston Logan Airport, which offers a tremendous platform for a possible expansion. These airports see tens of millions of European travelers annually, so that means demand clearly exists where JetBlue is already based. Secondly, JetBlue might have struck gold with their choice of acquiring a fleet of Airbus A321LR narrow bodies. It was the first, and remains the only, US carrier to operate the A321LR, and this aircraft's range of 4,000 nautical miles allows it to actually cross the Atlantic. Also, since narrow bodies are generally less expensive to maintain and operate than their wide-body counterparts, it could help JetBlue continue to offer low-cost fares. This should help them undercut the competition and solidify themselves as an attractive, cost-effective option in the mind of transatlantic travelers. Up until this point, JetBlue's resources haven't helped them too much in terms of domestic expansion, but it could have all it takes to become a real transatlantic player, and early returns have been promising. In the past few years, JetBlue has experimented with routes to Amsterdam, London, and Paris, which has been rather profitable for them, despite being nowhere near the level of the largest airlines. Expanding operations into Europe wouldn't be easy, however, and while JetBlue has locked down valuable slots in New York and Boston, it faces a very different reality in Europe, where many airports are currently operating close to full capacity. If JetBlue wants to become an important transatlantic operator, it has to first fix its rather weak domestic network. Having a strong domestic network is important to link passengers from across the west side into its hubs in the northeast, from which they can continue on to Europe. So the final question to ask is, how can JetBlue achieve its expansion, and what does the future hold for Spirit Airlines? Well, whether JetBlue can achieve their desired expansion without a merger is left to be seen. Reports claim that JetBlue might be trying to abandon the deal due to the tanking of Spirit Airlines' share price, as they now feel $3.8 billion is an overvaluation for the airline. In response, Spirit Airlines has claimed that the terms of the merger agreement remain in effect, meaning JetBlue can't just walk away. Spirit Airlines' share price has taken continual hits in the weeks since the judge's ruling, with the company losing more than half its value since. JetBlue's share price, on the other hand, has slowly been recovering following the ruling. So it looks like the effects of the ruling on both parties have been polarized thus far. Nevertheless, it does look like there's some positive recent news coming out of Spirit. The airline's CEO recently defended its ability to generate cash without the acquisition from JetBlue, citing a recovering domestic market. While Spirit do expect to once again lose money in this first quarter of 2024, their forecasted revenue of just under $1.3 billion is set to beat analysts' predictions, and cash flow is expected to be positive from the second quarter and beyond. Spirit still has looming debt payments for 2025 and 2026, but its executives seem to be confident of scaling through, citing efforts to improve on their liquidity. The airline ended 2023 with liquidity of around $1.3 billion and expects this figure to be augmented through cost-cutting measures such as adjusting its flight networks. Spirit also expects to receive considerable compensation from Pratt & Whitney, as well as RTX, because of the number of their Airbus aircraft they expect to be grounded due to engine problems. No agreement has been reached, but it could potentially help with Spirit's liquidity concerns. Additionally, as per the agreement, JetBlue is required to pay $70 million to Spirit, and a whopping $400 million to Spirit shareholders if the deal is blocked for antitrust reasons. Spirit could also argue that JetBlue can't terminate the agreement because there's supposed to be a 6-month extension in the case of an adverse antitrust ruling. Whether JetBlue eventually backs out or not, it's hard to see their relationship with Spirit Airlines will remain the same after this situation. We do hope they come to a meaningful resolution, however. Some analysts have also looked at the situation with the JetBlue-Spirit merger and wondered what it could mean for Alaska Airlines' proposal to acquire Hawaiian Airlines. The US government is apparently trying to prevent concentration of their aviation industry, and after now seemingly successfully blocking a second potential merger for JetBlue, a shadow of sorts has been cast over future airline mergers. Conclusively, it does look like JetBlue and Spirit would be okay without the merger. JetBlue's resources put it in a good place without the need for an expansion. So, while Spirit may suffer for a bit, if they could get a profitable 2024 and domestic travel invariably improves, they should be okay for the short to mid-term at least. But what do you guys think about the merger and the futures of JetBlue and Spirit Airlines? Please share your thoughts in the comments below. Until next time, take care.